Hi everyone, are you ready to learn how to analyze your properties the correct way? After watching this video, you're going to learn everything needed to do it, whether you're a new investor or you're an existing investor, and it's all going to begin right after this. Hi everyone, I'm Josh Tavares, investor and realtor with eXp Realty Brokerage. It'd be so great if you can help us out. Remember to hit the like button, hit the subscribe button, and hit the notification bell to get updates on our newly uploaded content. And here today, we are breaking down how to accurately analyze cash flow rental properties. There are many different people that are leaving out some very important information that could lead you in the wrong direction in the event that you're a new investor or even an existing investor looking to grow your portfolio. So I thought it was really important to create this video to give you a bit of an idea as to how we're going about doing this and give you all the information needed. So to start here on this Excel spreadsheet, we like to analyze everything from when we purchased the property. So we're looking at about 4 or 5 years ago in Niagara region. 337 this property was going for. One suite. We've got everything here from down payment percentages. We've got the rates on the lending associated in terms of the down payment, the complete mortgage, have everything all here. Now for the operating income, as you can see here, we have $1,800 going on for rent. We don't have any additional income at this point in time. And we have vacancy rate, which we can see is 4%, which is cautious. We like to add in there, even in the months that we don't have a vacancy. We tend to have these properties stay tenanted for a long period of time, which is fantastic. So we're looking to put about $72 every single month into our analysis, even if our property is fully tenanted at this point in time. So we're looking at this operating income being $1,728, given that taking place, the vacancy rate. And as you can see now, our operating expenses, the expenses that we're using to operate the rental property, are relatively pretty low, considering the fact that it's a single family home and we'll be delegating a lot of the utilities to the tenants. So we're looking at insurance, it's about $1,100 a year, $92 a month. Now we like to pay at times annually so we can save out on the cost, but I still like to kind of put on a monthly basis $92 just to kind of see how our property would be able to suffice in the event we decided to pay monthly, right? And we're not paying gas, electrical, or water, so that's going to really help with our cash flow, as our tenants are going to be the one taking that on the single family home property. Now, tax on the property is about $2,600 annual, which alludes to about $216, so about 12% of the operating expenses there. And property management is 8% in the region that we're investing in the Niagara region, which is about $138 a month based on the $1,800 in rents. So we're looking at about just under $3,000 as we speak. And repairs and maintenance, we always like to add about 5%. Now, maintenance doesn't always happen, but it does happen from time to time, and it can actually be higher, it could be lower. But even in the months where there isn't any, we like to have $138 in the budget taking place, just to kind of show the property can sustain itself in the event that something did take place. So as we're seeing forward, we're seeing for the full year about $76,072, and monthly is about $455 in the total operating expenses. Now, as we come further, we're looking and seeing that the net operating income on our property is about $1,273, being about $13,064 for the year. And our expense to income ratio is 37%. Now, in terms of financing, our mortgage is about $1,616 a month. Interest paid for the first year is about $13,178 back from the first year anyhow. And principal reduction for the first year, $6,214 combined. Principal and interest the first year, $19,000, almost $20,000 overall. Now, for the cash flow perspective that we're seeing cash flow of $527 every single month, just over $6,000 annual, pretty good cash flow for the one property alone. Net principal reduction being minimal, being pretty low at $10 and about $114 per year. And the cap rate's a little bit lower, but we're seeing great cash flow. We're seeing great appreciation on this property as we purchased this property for $334, and it's over $500,000 at this point in time. Now, as we're seeing with this analysis that we have here, is that we're able to manipulate these numbers to kind of see. So for the property appreciation, I'd like to keep it minimal at about 3%. Really, as we've seen in the last few years, we've probably seen more about on average like 20%. Put that in there, which makes a big difference on everything here. So it's but we're going to put it back to about 3%. More of a normalized percentage before things got really, really hot and heavy in the Greater Toronto area. So as you can see, the property appreciation And property equity, principal reduction has definitely continued to be pretty steady in terms of its ability to increase over time, building our equity. As you can see, 4.7% to 9.28, all the way to about 18% in equity. Property equity, including principal reduction, all the way down to about 68,000 come the year 4. And a property value going from 347 to 379. Now, let's just put realistic numbers back on the board, about 20% per year. Yep, we're looking at about, hasn't been as high as much, but we're looking at about, close to 700,000 for property appreciation, equity over just close to 400,000, and property equity of 55%, which is very high and doing well for itself, which is super fantastic. So we'll leave that at 3. And this is an example for a single family home. Now this can change, of course, for duplexes and so on and so forth, where you have to look at different forms of income. Where with duplexes, do keep in mind as an investor that if there is separate meters for things like gas, water, electrical, typically it's going to be more electrical based on some of how these properties were built many years ago. You'll only be able to outsource so much to the tenants, and the rest you'll have to take on. But the great thing with single family homes, especially we really started to take on, especially in the US side, is that the tenants will be able to take on the utilities under their own name, saving you anywhere from about $250 to $500 every single month, which is substantial for your own utilities. And also for maintenance that we actually love to with the investing in Detroit is that for our own rental properties, we don't have to provide the appliances such as fridges, stove, dishwasher. That's something the tenants bring their own of, because that way we're able to cut back on costs. And that's a little bit more standard in terms of investing in the area. Where in Ontario, it's standard to have appliances on base, which can lead to hundreds if not thousands of dollars every year, every couple of years in terms of replacing. As we all know, appliances are not as durable as they once were 30, 40, 50 years ago. So the cost, it feels like every other year we're replacing something or having a handy person coming in on site to having to fix something. So that's something that we really love about investing in Detroit. On top of the great cash flow, appreciation, everything as such. So when going about and looking for rental properties, now if you're a new investor, I highly recommend definitely taking a good understanding of how this chart works and everything, because when you're a new investor, you could find a lot of information and numbers online. However, not all the information is going to be accurate, because you might find, information that might say utilities may cost this much, property tax might be this much, but they could be information from 10 years ago and everything has substantially gone up in price. So one thing I highly recommend, especially when it comes to determining some of these operating expenses, is speaking to investors who actually invest into the area. Go about reaching out to even the city to find out what property tax roughly in the area. Reach out to utility companies, speak to other people who are also in the space, even your own team. You may have your mortgage broker, your realtor, your accountant who actually invest in those areas. They can give you a rough idea as to what to expect. So if you're beginning to get into the industry, you have a really solid foundation in terms of what's the best price range you're looking for based on the utilities, operating expenses, and then you can look at your cash flow at the end of the month and know that you'll be able to cash flow correctly, because there's a lot of information out there. You want to have the most accurate information that's going to be giving you the most correct analysis. So when you go about purchasing a property and receiving the keys on closing day, you're going to have the best numbers and to get the cash flow that you're looking for, especially if you're going about joint venturing. By having a good portfolio with great cash flow, not only is it great from a lending perspective to be able to build and multiply and have, use equity for HELOCs and cash out refinance, whichever is best for you at that point in time. But it's also great to actually show other investors who may want to partner with you to say, hey, here's what I've done to grow my portfolio successfully by keeping my expenses low, keeping my cash flow income high. So I've been able to generate tons of income and have had the ability to refinance and be able to work with other investors or work with the bank to continue to receive more lending, more funds from them to help grow your real estate portfolio. And just some of those things that, to be honest, if you don't know anyone in that space who is investing in the region that you're going after, try to go and gather as much information. But one important thing you have to also consider is that sometimes you just have to take the plunge, gather all the information make sound judgment based on all the information and learned you've taken place, either from content on YouTube, from books you've read, from the mentor, so on and so forth. There comes a point where you're just going to have to jump in the deep end and have to learn for yourself. And there's just certain things that just can't be taught, and you'll have to learn how to go about solving problems, being solution oriented for issues that'll come up, whether it's property management, dealing with collecting rents, issues with the city in the event that anything comes and takes place, maintenance concerns, how to go about reducing your costs, increasing cash flow legally, how to get permits, anything as such. There's certain things that you're just going to figure out by doing, and that you can only have so much information that could lead to analysis paralysis. But there comes a point when you have a lot of information, you just have to take the plunge. And that's why it's really important to do very sound research and working with individuals who've worked in the space, so you can gather similar information here and be able to provide this information. Like I said, use it for other investors, use it for other people who might want to partner with you, to show them what you've done and why they should partner with you. And essentially to show your lenders, like, hey, here's the equity we're receiving, here's the equity we're receiving, and here's what we anticipate in the next 4 years. Here's the principal reduction plus equity. Here's the cash flow we're receiving. Here's what we're getting per suite. Here's our cap rate, to really show them perspective how sophisticated you are, so they can trust you and have the ability to scale and multiply. I really hope this video is super helpful, insightful, and gives you all the information you need on how to correctly analyze a property. If you guys want any more information, please leave it in the comments below. I'd love to, be able to provide as much information as I possibly can based on our experience. Remember to hit the like button, hit the subscribe button, and hit the notification bell to get updates on our newly uploaded content. Josh Tavares, Realtor at eXp Realty. Take care.